Yo, now this is one of the most crucial topics in forex trading, liquidity. Trust me, if you understand liquidity, you are on your way to profitability because it's liquidity that will determine your entry, is liquidity that will determine your target. Now, what is liquidity? So liquidity is money. Yeah, liquidity is money. Is where the money is resting in the market. So liquidity is money, and price seeks for two things: liquidity and to rebalance imbalances. So we are talking about liquidity today. Next time we'll talk about imbalance. Now, this liquidity is money. Is where the buy orders, the large orders are resting in the market. That is what liquidity is. It is what it is. Man, so now we know that liquidity is money. So how does this liquidity how does it affect the market? How do we use it in our trading? Now, remember that in our last lesson, we learnt about swing highs, which is this high, and our swing low. Yeah, this is swing high, this is swing low. Now, when it comes to liquidity, yeah, we have basically two types of liquidity. So just as we had our external structures and internal structures, we also have two types of liquidity, which is external range liquidity and internal range liquidity. Let me correct. So we have the external range liquidity and the internal range liquidity. This our swing highs and our swing lows, just as it was, is our external structure. Here too is our external liquidity. And then any other liquidity inside this our swing lows and our swing high are what we call internal range liquidity. Now, another name for our external liquidity can be our buy side liquidity. So another name for our external range liquidity, oh sorry. So another name for our external range liquidity, we can call it buy side liquidity, and which is this one, our swing high, which is the buy side liquidity because it is liquidity that buyers will take. It's the liquidity that is taken when buys are passing through it. Do you get? And then this one we call it sell side liquidity because it's liquidity taken when sales are happening. So if you just remember that, okay, when sales are happening, the liquidity taken there is sell side, and the one taken when buys are happening is buy side liquidity. So these are names that you can call our external range liquidity. This one is the buy side liquidity, BSL for short. Then this one is the sell side liquidity, SSL for short. So if you see people labeling those SSL, BSL, just know that it's buy side liquidity and is sell side liquidity. Now, these are basically the types of liquidity. Now we have forms of liquidity because now we know that our liquidity is either external or internal. But how do we now identify those liquidity when they are external, and how do we identify them when they are internal? That will now bring us to forms of liquidity. All right, so in this video, these are the ones that I will be covering. Yeah. So just know that, yeah, when it comes to liquidity, let's say, I told you this is our structure. This is our swing high, which is now our buy side liquidity, and this is our sell side liquidity. Yeah. Let's say we want to buy, want to join this. This is in a discount zone, and then we buy from here. And then where will be our stop loss? Our stop loss will be under this low, under our sell side liquidity, targeting our buy side liquidity. So under every low that you are seeing in the market, that means there is liquidity. So under every low, under every high, there is liquidity. That's why you are seeing this sell side and buy side liquidity. Why is there liquidity? Because that's where we are putting our stop loss. People that will be selling from this high, people that will be selling from here, they will also put their stop loss just above here, giving liquidities. So price will just come, price can come if there will be manipulation, sweep this one, taking out our lows, taking out our stop loss. They've chopped our money and then they are going in profit, chopping people's money here too, because people will be selling from here, chopping their money, then pull back and then continue the buy. Do you get? So if you understand how liquidity works, it will be very easy because I don't want this video to be long. Now, let's move to the forms of liquidity. Now, for forms of liquidity, the first one we have inducement. Inducement is a trap in the market. Yeah, I told you this is our structure. Yeah, now this is our structure. This is a buy structure. What are we supposed to be looking out for? More buys. But do you know that inducements can do this? Pull back, go. Now, do you see we have this break of structure and we also have this break of structure. Where are we supposed to be looking for our buy? It's supposed to be somewhere here that we will be looking for buy. But at times, if there's no liquidity guiding this POI, if there's no liquidity protecting this zone, market will come, use that zone as liquidity, tap into this area, and then buy. So this right here is the inducement. Why? Because it trapped buyers to take trade. So inducement is a trap. Let me label here to be trap. So it trapped buyer here to enter the market, and the short form for inducement is IDM. IDM is the shorthand for inducement. So you can see market does this a lot. This is what I literally trade. I used to tell anybody that make sure that there are some people that has received stop loss before you buy. If you have that mindset that okay, I need something to be protecting my entry, where are the early buyers? Where are those early buyers or early sellers? Where are they selling from? Once you find where they will be selling from, you just find the next POI below it and then be selling from there or be buying from there. Before we move on, let me show you what this inducement looks like on the chart. Alright, for this chart example, we'll be using Euro USD because I don't want it to be like, oh, everything you're teaching, it only works for gold. No, it doesn't work just for gold. Now you can see we got this break of structure right here, and then we got this pullback. You can see this pullback, and then we got another high here. On a norms, where are we supposed to be looking for? After this break of structure that we got here, we're supposed to be looking for our entry at the discount zone. Yeah, probably this should be in the discount here. So we should be looking for our entry around here. And then our stop loss will just be below the low, covering this guy. Yeah. And then targeting this high. But then what happened? You can see that price came, took us out, and then still went straight for our take profit. Why did that happen? Because looking at this guy, there is no liquidity protecting it. There is nothing here protecting it, yeah? And that is why price took it out, using it as an inducement, using it as an inducement to tap into this engulfed candle right here. You can see it's bullish engulfing. Tap into this engulfed candle, which can also serve as a demand zone. And then but we'll just put our SL just below this low, which is the invalidation. Our invalidation zone is always below the low of the leg we are buying from. So we should always cover it. This line now is our invalidation zone. So we can just give it breathing space in case of manipulation and then still target our high. You can see the way we smash take profits. You can see the way it smashed. This is for RR, meaning if you're risking for $100, you're getting $400, almost $450. Do you get? So this is how this works. This is how inducement works. Let's look for another one. So this right here is a break here. You can see this is where the body closed. And you can see that before that high was taken, we have this other structure that pulled back a bit and then broke another structure. Yeah. So this right here is our inducement. This right here is our inducement, and we can use this POI right here, and then you can see our target got smashed. Let me put it. In this case, where will be our SL? You can just put it at the body close of these candles or below the wick of this candle, just to avoid manipulations. And then we give our target, and then you can see the way our target was smashed. So this is an inducement. It's called a trap for a reason. It traps the early buyers or the early sellers. Let me look for sales example. All right, so this is a sell example. This right here is our break of structure. And remember, before the break, before we took her down, there was a break here and there was this pullback here. So people will be buying from this area. So this right here is our inducement. And then we'll just look for the next POY close to it, which is this guy. And then we can sell from, targeting the next form of liquidity. Now, let me show you. You can see now, okay, we've not touched trend line liquidity, but we're going to touch it. We can just target this next time, yeah? So this is an inducement. This was a trap. You can see people sold from there. See the reaction. See this bearish, let me zoom in. See this bearish candle. You can see when this price got here, they sold. We had reaction, meaning that people were selling there. But all those were liquidity for this POI below. Do you get? So that was it for inducement. Remember, inducement is always a trap, and inducement should break structure. Your inducement, it should break structure to be a valid inducement. Now, you can see that this last example that I used, it's not that it has to start from here and break structure. You can see that before it broke this structure, there was a minor pullback and it came and broke the structure. This is a valid inducement because it broke structure. Yeah, we are still touching other forms of liquidity, so we will touch others. Now, let's talk about engineer liquidity. Engineer liquidity is, let's say price, let's say price is coming to your POI. Yeah, there's no liquidity protecting this POI. Let's say this is, let's say this is your POI here. But there is no liquidity protecting this POI. What will price do? Price will come. Maybe there's another POI above that people will be buying from. Price will use that POI to engineer liquidity. Now do as if it wants to go and take out this side. At times it might take it, at times it will not. Majority of the time it will not. It will just be few rejection, just pull back a bit, then come, tap into your zone and then buy. This right here is engineer liquidity. Now, this engineer liquidity does not have to break structure. So, the IBM, which is inducement, must break structure. Engineer liquidity doesn't have to break structure. It can even be a single candle. As long as price rejected from that PO and then comes out to sweep it. Remember, for price to reject, it means that people were buying here. And as price is coming, more people want to add more buys, and then price will just take them out and then tap into your POI and then give you a massive push. Let me show you what this looks like on the chart. Now you can see this example. Although we had an inducement here, yeah, the POI, the inducement was very far from the POI. What did price do? Price first engineered this liquidity. You can see the wick, you can see the rejection. Price first engineered this liquidity, meaning all those early buyers that bought from here and they probably put their stop loss under this low. Price came, swept them before the massive run. So this right here is an example of engineer liquidity. So this is an example right here. Yeah, you see that this leg is so neat. Price did not create any liquidity while running. So when price was coming back to use this other block, what did it do? It engineered liquidity. This right here was our engineered liquidity. What's the logic behind that engineered liquidity? It means that people will FOMO to buy early at a particular zone. So once they have put their buy and they've put their stop loss below this candle, price will come, collect their money, tag you in, and then make money for you. But if you're among these people, price will collect your money and then tag people that waited and move. Now see here again, what the price do? They see the neat leg. Once you see that a leg like this is neat, either you wait for engineer liquidity or you wait for inducement to be created. Now you can see why price was coming down. Price engineered this liquidity, meaning people bought from it. You can see the reaction. The buyers pushed it up and then even took it high to this guy before the sellers now came, took out the early buyers and then more buys. You can see after that manipulation has happened, you can see the candles, you see the massive push. That is it. This one is an example of inducement. You can see that it broke structure to the upside and then it's tapped into the clear nearest POI. So this is an example of inducement. You can see that I'm using Euro USD. I don't trade it. I have to be searching for this example. That's to tell you that it works on every pair. Whatever I'm teaching you, it works on every pair. Let's go to the next form of liquidity. So the next form of liquidity is double tops and double bottom. Now at times those double tops and double bottom, they might look like M pattern like this, yeah, and W pattern. Majority of the time they look like M and W pattern, yeah. Majority of the time they look like M and W pattern. Now this is a form of liquidity. What price does is that price will come, sweep it, and then continue the buy. Because people that bought here, they put their stop losses below, and market makers, they are interested in those money. So when you see double bottom, double top, just wait for it to be taken before you take your buy. This is double bottom, yeah. Price will most likely come, sweep it like this, then buy. This one double top, price will sweep it and then sell. So always wait for that manipulations to happen and then you buy. Does it happen all the time? Let's say it's 5% of the time it will be manipulated, but the other 15% it will not be manipulated. So would you rather wait for that 85% of the time, or you rather risk the 15% to always hit stop loss? I will rather wait for that 85% of the time, yeah. So let's look for an example of this on the chart. And if you want me to be using another pair, just tell me the name of the pair you want me to use for the tutorial in the comment section, so that I will be switching pairs. Do you get? So that you know it works in every pair that you are trading. Okay, I found a very good one. So you can see people were buying at this zone, which is very valid, yeah. But then price now printed this double bottom. You can see it came down, went up, came down. People will still buy from here. You can see the reaction when price was coming down. People will still buy from there. But what the price do? This is liquidity. Price took it out, tap into another zone that is closest to that liquidity area, tapped into it. You see that our indecision candle also acting as demand here. Just note that indecision candle. Price tapped into it, and what the price do? Price started run. That's where price reverse from. So when you see double bottom like this, just know it's a form of liquidity. I think I saw another one. You can also see this guy. You can see that this is double top right here. Forget those weeks, but this is double top. You can see how price swept it. Price did not break above, price swept it. Why? Because it is liquidity. It is liquidity. You can see how price swept it and then came down before we continue the buy. So this is double top. This one too is double top. You can see the 2 weeks. Those are double top. You just need to identify. See here too. This high and this high. You can see that it formed M pattern. Just look for the M pattern. See it. See. Do you see? What the price do? Price came, took them out, and then we had a massive push to the downside. So wherever you see this double bottom here too. Wherever you see double bottom, but if this guy had come and swept it first, then allow its price might not come back here. Look at this. This would have been double bottom. But what happened? This candle took out the liquidity. So there's no need for price to come below it. See, you see, there was no need for price to come below it. Why? Because the liquidity here has been taken. But this one, there was need for price to come and sweep it because liquidities are still resting here. And you see what price did? Price came, took it out, tapped into the nearest POI and bought massively. So that is how you trade double tops, double bottom. Once you see them, just look for the POI that is closer to them. This is the nearest POI to this guy. And price came, tapped into it, and then moved massively. Yeah. So let us go to the next one. All right. So the next one is single candle. Now, single candle liquidity. I love to use it on a higher time frame, like daily, weekly, monthly. Once the daily candle low is taken, that is a massive liquidity. It means that everybody that bought the previous day, it means that their SL has been taken. Do you get? Everybody that bought the previous day, means that their SL has been taken. You can see here, we got this sweep. We got this daily sweep. This is a daily candle. You can see that this guy, the bearish candle, swept it. Let me clear here a bit so that you can see. You can see that this bearish candle swept this candle here. So this is a single candle liquidity. Once you get this sweep like this, people call it CRT. Once you get this sweep, the next place to target is the low of that candle. Do you get? Once you get a sweep in daily or monthly candle, you get a sweep and the price close like this, the next place to target is the low of that candle. And if it sweeps the low, let me look for a low scenario. Yeah, but this one is small candle, but it doesn't matter. Let's use this one. If it sweeps the low, you can see that it swept this low. The next place to target is the high. This is a single candle liquidity. The next place to target is the high. That is how it works. Yeah. So this one is very, 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 very simple. Once it sweeps the high, just target the low of the other candle. It doesn't play out always. Like I always say, nothing is 101% sure in this market. Look at here too. It swept this low and then it straight up went for the high. Yeah. So see, the thing is, just search for these things more in the market. You'll be amazed. So the next form of liquidity is the wicks. Yeah, the wicks. Now, I've told you what our candlestick wicks are. These are wicks. So majority of the time, anyway, you see so many wicks. You see like this guy now. Where is that my curve? I didn't add it here. Like this guy, all these wicks. Can you see all these wicks? All these wicks are liquidity. You can also call it trend line liquidity. Let me don't bring trend line yet. But these are wicks. You can see how this guy swept this wick and immediately reacted. All these guys are liquidity. Wherever you see wicks, just know that liquidity is resting there. Wherever you see wicks, like lots of wicks in a particular place, or this kind of wick, just know that price is still coming to take it out because it serves as a form of liquidity. See these wicks too. Just know that, see all these wicks. Know that price is definitely going to take it out. They are liquidity. See this one too. You can see how price just put back a bit and then came to take it out. So we have single candle wicks. At times, you will just see a POY and you will see this single candle wick. Just know that price will come and take it and then tap into your POY. But majority of the time, I personally don't use this. Majority of the time, I hardly use it. Unless the wicks are plenty like this in this area, then I'll know that yes, that's an area of liquidity. So I can put my target there or I can avoid taking entry from there. So the next one is consolidation. I love this consolidation because gold, after running a lot, can just come, manipulate, and then buy. You can see now, this is the daily of the Euro USD. You can see this area. Price is neither going up or coming down. This is an area of consolidation in this market. Yeah. This is an area of consolidation. What the price do? Price will definitely come, take it out, use the nearest POY, and then buy. That's what price does. So an area of consolidation, let me use gold. There's an example on gold that I caught. I think I've even shown you guys when I was doing indecision candle. There's an example that I caught. Aha. So in this area, gold consolidated the whole day. People were buying and selling. But I personally, I was like, no. I think if we go to the 1 hour or 15 minutes, there was even a double bottom there also. There was a double bottom there. So it was just screaming, liquidity in my ear. I think in the 15 minutes there was a double bottom there also. So it was just screaming, yeah, you can see. You can see the 2 weeks. There was a double bottom there. So I just knew that I don't want to buy in this zone. Why? Because I've already seen that this is consolidation and then there's a double bottom again for price to take. So I was waiting somewhere here. I've shown you put the indecision candle before. There was an indecision candle there acting as a demand zone. And that was where I took my buy from. And I caught this buy, yeah. So an area of consolidation will definitely be manipulated and be used as liquidity for the next POY. Yeah. So the next one is trend line. You see this trend line? Don't joke with it. Don't joke with trend line liquidity. It will help you. Now look at this guy. We have been buying higher high, higher low, higher high, higher low. All these things right here that you are seeing, all these things right here, they are trend line liquidity. Let me arrange it properly. All these are trend line liquidities. And what will price likely do? Price will likely come, take them all out, or take the first two or three and then buy massively. I personally, I wouldn't have catch this buy unless I use confirmation entry. Why? Because I'm also seeing double bottom. I'm seeing two equal lows. It can be double bottom, it can be two equal lows. This is relatively equal lows. So I would have been waiting for price to take it out. But probably if I had gotten the confirmation market structure sheet, I would have joined the buy. But you can see it took out this trend line. This was the first low. This was the second low. It took them out. And then you also, oh, okay, I would have caught it. You see, this is an equal low that is just above this POY. This is an equal low. This also was an equal low. So after it has taken first equal low, taking second equal low, there's no need for it to come back to this third one. I personally would have caught this buy. Once I noticed this first one, this second one, even if I noticed only this one, I would have taken this buy. Why? Because those equal lows are liquidity for price to definitely come and take. And then joined with the trend line liquidity, it makes this setup A plus. Yeah. And then when we are doing, I think there's another form of liquidity I will show you. 3 break of structures to your POY. That's like one of the strongest form of liquidity. Do you see? People now will say it's only on gold though. This is Euro USD. You can see when market was coming, this is the first break. This is the first BOS. This is the second BOS. This is the second BOS. And this is the third BOS. This is the third BOS. As you can see, once price is pulling back to your entry and it gave you the first break of structure. How will you know the first break of structure? You can see this high. This was liquidity. It took it out and then it pulled back. Yeah. And then it came down. It now broke structure to the downside. Pull back again, broke structure to the downside. This is the second one. Pull back again, broke structure to the third side. If your POY is close or is tapped into after this third break of structure, knock it better lot size, because after that third break of structure, price is going to run massively. You can see the push, see the candle. You can see the candle massively. So this is another form of liquidity that I use. In fact, if you're in my Telegram community, you know I hammer on this a lot. First break of structure, second break of structure, third break of structure. How will you use it? Just look for POY. Make sure you have your POY set. Let's say you are thinking we price use this POY or we price use this POY. Do you get? We don't know where price is going to react from. But as long as we've identified that this is a trend line liquidity, we know that this first one is going. And most probably this second one will go. Yeah. Once this second one goes, then we can now form, say we will use this one or we will use this guy. Since we don't know what to use, the next confirmation we should use for is these 3 breaks. Wait for the first one, wait for the second one, wait for the third one. It's not all the time that it does 3 breaks, so understand it's not all the time. But when it does it, it means that this POY that is buying from is a very high probability POY. In fact, if I see this trend line, I see these 3 breaks, I will go borrow lot size, NACA. And then I see these 2 relatively equal lows, which is also, you can call it double bottom or you can call it 2 equal lows. This is 2 equal lows, also serving as double bottom. I will knock it better lot size because this is massive entry. And then you can also add another confluence. We see that this is our break here. Yeah. And then we use our Fibonacci 2 and then we check. You see that our POY is this is our POY in the discount area. So this POY was in discount area, but what disqualified this POY for me was that there was relatively equal low below it. So I wouldn't take it, but I would take this one because why? See, it swept liquidity. And then we have 3 breaks coming into it. This is a very, very strong POY. So for those of you that are asking me how you can use your these 3 breaks, this is how you use it. And also, when you are now buying, yeah, look at this zone. Let me delete some of these things. When you are now buying, yeah, you can see that inside our internal structures, we have 1, we have first break, we have this second break, we have this third break here, because this guy did not sweep liquidity, so I really do not like it. This one swept liquidity, that's why the second break. Okay, no, this is our market structure shift. This is our market structure shift. So this is our market structure shift, we will not count it. This is our first break. This is our second break. I really don't, but this guy swept liquidity, you can count it, sha, but this, to me, this is my second break, because I feel like all these things are price just creating liquidity. This one too, I feel like it's price just creating liquidity. So this is our second break, and this guy here is our third break. So after our third break, we expect a manipulation. That's another liquidity. We expect a manipulation after our third break. At times, it might break more than 3 or 4, even 5. Do you get? But just know that there's a manipulation coming. So it's not when price now manipulates. Look at the way it manipulates. Took out this guy now. Everybody will now be bearish. They want to come and take out this low. No, that's not what I taught you people. That's not what I taught you people. It means that all this liquidity, remember that this guy here is our swing low. Always remember your swing low and your swing high. And this guy right here is our swing guy. So unless price has taken any of them, all these ones are internal structures. Do you understand? And all these things that you're seeing are internal liquidities. Our sell side liquidity has not been taken, our buy side liquidity has not been taken. All these ones are internal. Nothing concerning us with changing our bias from bullish to bearish. So after the third break, at least 3 breaks, I learned this from Lex. So let me give kudos to who I learned it from. I learned this from Lex. After the third break, just wait for manipulation to happen. If manipulation does not happen, you can continue your buy. There is an SL I took on gold of recent. I'm sorry, I trade only gold, but you can see I'll show you an example of it on Euro US so that you know say it only works on gold. No, it doesn't work only on gold. There's an SL I took on gold. You know, when you chop stop loss, you have to like sit yourself down and ask, what did I do wrong? That is how we learn in this market. It's not if you chop stop loss, you'll now be forcing trade. When you hit stop loss, you sit your ass down and ask, what did I do wrong? So yeah, we are back. This is MSS right here. And then we got our first break. This is our first break of structure, right? And then we got our second break. You see that it took liquidity. So this is our second break of structure right here. These ones were liquidity, so I don't count this as break. But you can see our price swept it and then broke structure. So this was our third break. But I failed to count our break of structure. I was now buying from here. You can see that price still reacted from that zone. But because we've already had 3 breaks, and then there was also trend line liquidity. Yeah, there was also trend line liquidity. So price just had to manipulate, take out this first one. And while it was taking them out, look what it was also doing. Now, this was the first break that's taking out liquidity. This was the liquidity. So you pulled back, and this was our first break. You can put it here. This guy here was our first break, because this is a low that printed a high. So that was our first break. Then it pulled back. This was our second break, and this was our third break. That's why when everybody was saying gold is going to come and take out this low, as I just saw that it has broken structure 3 times, what did I do? Not give it I'm still holding this buy. Hopefully we hit TP. I don't even know why. So you can see after 3 breaks, the manipulation started, plus trend line liquidity again. When these two are together, just know that if you catch the setup, it is going to be an AAA plus setup. And you can see since then, market has been running. Those are the types of liquidities we have. I've touched the trend line, I've touched the percentage, I've touched everything here. So all you have to do now is go to the chart. Yes, go to the chart, look for inducement liquidity, look for trend line liquidity. Let me show you inducement liquidity. I feel 15 minutes here. 15 minutes does a lot of justice to this liquidity, guys, because if you are waiting on the higher time frame before liquidity will be formed, you know that this guy, we had this break of structure, so this guy also acted as inducement. Me, I knew that this POY that I'm taking, this trade I'm taking from here, is liquidity, because I always say that your inducement majority of the time, yeah, it will come from the FVG before your POI. So I already knew that. I think if you go to the 1 hour 30 minutes, this place was an FVG. I already knew that this was an inducement for this POI, but I was thinking to use the breaker, I mean the mitigation block, instead of coming lower. But it did come lower. Use the other block and then I got FVG confirmation. Don't worry, when we get there, I'll teach you confirmation entry. But you can see 3 breaks and then 3 breaks to the downside, making this area solid. So many people are saying that price wants to come and take out this. I was waiting for it to take out this side. If it had not taken out this side, it would have been a weak low and it was at risk of being taken out. But now it has taken out the high. So yeah, I'm not bearish of any sort here. So we'll see how that goes. So I think that's it for liquidity. Please go to your charts, try to identify these forms of liquidity. We also have section liquidity, but I personally, like I told you, I don't look at sections. I don't trade Asian section, New York section, London section. Now sometimes Asian section will print a low or a low and a high, and then New York, before they will continue the sell to the trend to the downside, they'll first take out the high and then continue the sell to the downside. So those that trade sessions will know more of this. I personally don't trade session. Is anywhere my setup, I see my setup, I will set my buy limit or my sell limit. Anywhere it triggers me, that's where it triggers me. Do you get? So yeah, these are the ones majorly I work with on good. And for the single candle liquidity, I think I used it for this guy. Okay, it was not a single candle, but yeah, it was this. I used this liquidity. That was how I was able to catch this buy that gave me 8 RR. Yeah, that's how I was able to catch this buy. So if you go to the higher time frame, now that's why I say 15 minutes. If you go to the higher time frame, this would be single candle liquidity. Do you get? So yeah, yes guys, this is it for this video. I know you'll be confused after watching this video, but I advise you watch this video at least 2 to 3 times and then go and sit on the chart. Take it one after the other. Take inducement. Maybe spend 1 week on it. Take engineer liquidity. Spend another week on it. Take double top. Spend another week on it. Let me show you a very good example of double top. There was a trade I took SL on gold. Let me show you. Alright, so this is the trade. Do you know that if I tell you that, yeah, I caught a buy from here, yeah, and I held that buy. If you're in my community, you'll see that buy. I caught that buy. I think it was about 8 hours. I used lower time frame confirmation. I think it was about 8 hours. Yeah. But because I think it was, I just pushed it a little bit higher than this guy. You can see that this is double top. This is double top. M pattern, yeah, you can see it. So I already knew that yes, it was liquidity. But maybe because I was expecting it to fly higher. You see that this week just came, swept it. That's what I was saying. This week just came, swept it and dumped. Do you know that this trade, I took an L from this trade? Trade that was almost at TP. That's why nowadays, the way I take my profit aggressively. This was just last year October. I took like I hit SL on this trade. That's why if I just see rejection, bam, close to my take profit, and it has swept the liquidity, I will just leave the market. Do you get? So you have to, maybe when we are talking about entry, I'll talk about target and exit. You have to be mindful for where there's liquidity. An area that is filled with liquidity, price will definitely, once price sweep it, price can reverse to the upside or to the downside. Do you get? So this one too is another one, M pattern. You can see price first swept it and then push lower before the buyers took it out. So yeah, I've given you enough examples of these forms of liquidity. You see, especially this trend line on gold, I'm sure it's not even on the gold. See, maybe I still found trend line here now. Anywhere, yeah. See, this one's too. This sell too. They are trend lines. Do you see? Any pair you are trading, these guys too, I would have wanted these guys to be taken out here. Any pair you see, you will definitely see trend line. When you see trend line, just know where to put your take profits. Do you get? At least this first one that's in the trend line will be taking sharp. So no, if it will stop at the second one, it will stop at the third one, it will completely take them and enter another zone. Done. So yeah, this video is already so long, guys. So Please do the assignment. Identify these liquidities on your own. Use whatever pair you want to use. Identify these liquidities. Ask me, is this correct? Join the Telegram channel. The link is in my bio and all my social media. And for the YouTube, you will see the link in the description of this video for the Telegram channel. That's where you submit assignment, not my DM. Not my DM. And if you want to ask questions, ask in the Telegram community so that every other person will also learn from the answer. Don't ask in my DM, please. This is not a private mentorship. Alright, so I want people to identify all these liquidities. Make sure you also show me your buy side and your sell side liquidity. Do you get? Alright, so that's it for this video. This is one of the most important videos. Watch it at least 3 times. Alright, I'll see you in the next one. Bye.